Scot Ciccarelli with a word of caution on Target, writing the company was already in a very challenging position before the tariffs and now faces significant risk to what was already expected to be a soft year. Scott joins us now for more. Scott, welcome to the program, sir. Let's talk about the weakness already for the months ahead and how the tariff situation could just reinforce that weakness.
Well, I think you've had a couple things happen. First of all, February, early March, the weather was absolutely horrid for a lot of companies. You had a little bit of, let's call it a Christmas hangover, a lot of spending, right around the holidays, and then you get deeper lulls in between. And then, you had a later Easter on top of it, and then you have all the geopolitical situation. So you've had kind of a rough first quarter, but for most companies, I'd say Target's actually one of the exceptions. Sales trends seem to improve during the course of the quarter.
Scott, how do you think they managed inventory? They've been in positions where they've had too much and not enough. And we've seen big stock corrections. I remember May 2022, I think it was, coming out of the pandemic, where we had that massive gap lower. Scott, how do you think they've handled things this time around?
My guess is it's going to be pretty lean. I think a lot of companies, they want to make sure that they're playing relatively cautious, especially with the geopolitical headwinds, the way we've seen them with all the rhetoric coming out of D.C. So my guess is retail inventories will be reasonably lean, and I don't think you're going to be facing a lot of markdown risk. That's really what threw people off back in 22, as you mentioned. And so I don't think companies want to get back into that same spot.
Will they be eating the tariffs, as the president, the Treasury Secretary says, when you think of the likes of Wal-Mart?
Well, my guess is every company is going to try and manage it a little bit differently. I mean, the general playbook says you push back as much as you can onto the vendors, then you're going to have to eat a piece of it, and then you're going to pass on the rest via price increases. And each company is going to try and find, what's that optimal, kind of profit strategy. Specifically for Target, I do think they'll have to eat some of it, because otherwise you're going to be in a situation where your price gaps versus Walmart versus Amazon is just going to continue to blow out much wider and puts you in a really tough competitive position.
Scott, a week ago, we basically had this détente with China lowering the tariff rates. The president, over the course of the week, was talking about a number of countries want to do negotiations, and if they don't get to an end game, they're just going to set a new tariff rate. Is there a thinking in the retail space that by mid-July they will have clarity?
I don't know if there's an actual time frame associated with it, but I do think you saw companies like Walmart, like Target, like Home Depot basically delaying shipments from China, hoping that in a couple of weeks you'll get some sort of clarity. Now, eventually, where it ends up, is it July, like where kind of the 90-day pause, we'll get full clarity? I think that's certainly the hope, but there's no guarantee. I mean, we've seen kind of tariff commentary change not just week to week, but day to day. Right. So in that kind of environment, I think you try and manage your business as well as you can, and you kind of hope for the best, if you will.
How much is Walmart taking advantage of this moment to really steal market share at a time where they already have been? And arguably, that's Target's biggest issue right now.
Sure. I think Walmart is really putting the pedal down, if you will, and trying to open up price gaps as much as they can. Here's a stat for you. Since 21 relative to 25 estimates, Target will not have grown their sales base, whereas Walmart will have grown their business by almost as much as Target.
Oh, my gosh. So this is the reason why people are actually looking at Walmart and seeing them as both the leader when they come out and saying they're going to pass along some price increases, but also the big competitor. And we're talking about not just Target, but also Amazon, also a lot of the grocery stores. I'm just wondering how much you see that as the environment that we're in, a winner take all. It's not going to be Home Depot and Lowe's. It's going to be one or the other. And it's going to be a real sort of reckoning for any players that have a strategic advantage or not.
Yeah, look, I think there's some verticals, retail verticals, that are a little more insulated than others. You can call it home improvement, you can call it auto parts, et cetera. But, to your point, whether it's, Amazon, Costco, Walmart, they are scooping up the vast majority of that general merchandise sales between the three of them. And, that becomes a really tough situation for competitors to operate in. And what Walmart has done is, very similar to what Amazon did in terms of building all these alternative revenue streams, be it membership, third-party marketplace, advertising, et cetera. And so they're actually helping subsidize the core retailing business, buying something from a vendor, selling it to a consumer. And when you do that, and they're driving their own margins down, despite retail margin down, despite this massive sales growth, it just makes it harder and harder for all the smaller companies to operate in.